There's the tool by which a chip is designed, but also validated. So before you send a chip through the fab to be manufactured, you test that actually the design is going to work. And it's really interesting because Synopsys is a supplier to Nvidia. They use that software platform. The stock's up 5%. Nvidia bought these shares at $414.79. It's now up near $440 a cent, taking between 2 and 3% of the company, replicating a playbook that you and I have discussed with Nvidia a couple of times this year. They took a stake in Intel in what was an engineering partnership. They took a stake in Nokia, which was also an engineering partnership in the telecoms domain. So there is some questions about, well, what does Nvidia get out of this? Synopsys is used by basically anyone that has their own chip designs, right? And so there's an argument that this gives Nvidia a sales channel. Synopsys will say, our software platform is so much better when it's run on Nvidia GPUs. So if you want to use our software to design your chips, you should also use it with Nvidia GPU to power that compute.
It seems like Nvidia, it's almost like an investment business as well as a chip maker. They have stakes in so many other companies.
Yeah.
It's got to be a huge portfolio. Is this part of the strategy?
I mean, we've had the opportunity to discuss this with Jensen Huang several times this year. Every time I've asked him what's the rationale behind taking 2 to 3% of a company, he basically will say, I thought it was going to be a good investment. And particularly in October when we were in DC and they made the Nokia investment, you know, that day Nokia's stock jumped 20% and he almost joked with me, well, I was pretty genius move, wasn't it? His words, not mine. But, you know, it's kind of separate from the circular financing debate in that, you know, they take equity positions where their bet is that the technology partnership moves the field forward in some way, and they get a return on the stock, different to, say, lending money that's discussed in Ian King's Tech Daily today, you know, the circular financing versus backing up loans debate. For Jensen, it's a very simple calculus. Is this or is this not a good investment? And they've got some cash to spare right now.
The debate or the story really of last week was Google TPUs and you know how efficiently they power Gemini and also Gemini versus ChatGPT. John Authors has a great column today wishing ChatGPT a happy 3rd birthday. How does this all seem to be shaking out? Because it seems that that SoftBank's CEO Sun was so sad that he almost cried when he had to sell his Nvidia stake, but he needed the money to invest in OpenAI. Like, what if they're not the ultimate winner?
Yeah, I followed this story from the beach last week because, as you know, I took a break. But it was kind of interesting to take a step back. The very simple argument for those that are still bullish on Nvidia and discount the threat of a Google TPU is that Nvidia is still supply constrained. They will sell every single GPU that TSMC can manufacture for them. And their margins are high, so there's no price pressure. There's no suggestion that Nvidia is having to discount to ward off some of that threat from TPU. And, you know, TPU is also not that new a thing. I think this is what's so interesting. It's come up in the news flow because Google has started to do deals with third parties. The latest reported one that spooked the markets was Meta, right? But they had previously tried to make the TPU available to third parties with less success. And right now, from a volume perspective, Nvidia still holds 90% of the market, which when I grew up in the Bloomberg newsroom studying from you, that's a technical monopoly, right? And that's an enviable position to be in.